Good morning, folks. Welcome to the Daily Read with Jeff Kikel. It is Thursday, August 6th, and I cannot tell you how crazy goofy this week has been. And it is another crazy goofy day in a whole bunch of crazy goofy days this week. So let's get started and let's talk a little bit about what I'm referring to. So this week has been just all over the fence. We are at near records on all the indices, but they're getting a little wobbly. AI chips being sold on beats. Defensives have held. It's a bit of an exhausted trade, and oil is still in the $76 range. So let's kind of talk about one of the crazy, goofy things of this morning. A company reported earnings this morning that grew 109%, beat on every line, up the top line, the bottom line, and the stock fell 15%. That's not a typo. It's not a one-off. It happened across the whole AI trade today. When great news can't lift a stock, that's the market telling you something. So let's make sure we listen to it. So quick reminder, Regime Lab, which we call it internally, is our daily sourced read on the market. And today it's flashing subtle yellow lights. We're still near record highs, but underneath the mood shifted from the AI and chip names that have led this rally, and they've gotten sold on their earnings beats. Western Digital beat big and dropped 15%. SanDisk beat and also fell 11. Datadog beat and lost 17. While the steady, boring names, a soda company, a power utility, went up. That's the market quietly rotating away from the crowded trade one more time. And it's all happening while everyone waits for one number tomorrow. So getting into it, here's what's really going on. When a market beats expectations or when a stock beats expectations and falls anyway, it usually means one thing. Everyone who wanted to own it already does. There are no buyers left to impress. So even great news becomes a reason to take profits. That's the sign of an exhausted trade, and today it hit the AI names hardest. But notice what held up. The Dow was positive, credit stayed calm, and defensive corners in the market, staples, utilities, and healthcare, did just fine. So this isn't fear, it's the same rotation we've watched all along, out of the crowded names and into everything else, playing out even one more time. So what does this mean for you? Two things. First, if your portfolio is heavy in the handful of AI winners, days like today are a reminder that even perfect earnings can't always hold a crowded stock up. The price already assumed perfection. Second and bigger, the market is holding its breath. Everyone, traders, the Fed, all of it is waiting on tomorrow's jobs report. Until that number lands, the tape is going to feel indecisive because it genuinely is. Don't read too much into the waiting room. And it's an interesting thing when we look at that market we look at that number for tomorrow. A big number, a big surprise on the upside could easily cause the market to go down, which you would think, okay, more jobs, that would be a good thing. But the market is betting on what what we expect from the Federal Reserve. And if the Federal Reserve sees jobs coming up significantly, they're very likely to go forward with their plans or what people think of possibly even raising interest rates. I don't really think we're going to see interest rates move at all until later in this year, until after the midterm election. The Fed typically doesn't like to make moves prior to elections happening, but you could see it happen if we see a big pop. Everything's pointing to that number actually maybe a little lower. It's probably worth taking the time to plan ahead. I personally would suggest making sure you keep a pretty good chunk of cash in your portfolio just to cash or really low risk investments for the time being and let us ride through some of this craziness. And typically August is a very low volume month anyhow. So it's a time when the market can really have wild gyrations either way. So, what do we have going on for the rest of the week? The jobs report lands tomorrow morning, and it's the number of the month. After week private numbers on Wednesday through ADP, the whole market is bracing. A cool but steady report keeps the easy Fed or the easier Fed rally alive. A 2 week one flips the mood from relief to a growth scare in a single session. Everyone's been a rehearsal, or everything's been a rehearsal. Tomorrow at 8:30 is the actual show. So quickly, let's go over what the summary is for this. The beats just aren't enough right now. And if you have any stocks that have had a big run up going into earnings, it might be the time to take a little profit before you go into earnings. Confidence right now is medium. We're just mixed. You saw if you've watched the show for the last couple of days, we've been in the green on our scorecard, and it went to yellow today as a result of some of this. Risk level is still elevated, and the market is very volatile either direction. Friday's jobs report is it. Are we cooling? Are we stalling? Are we going up? Who knows? Tomorrow at 8:30, we're going to know everything. So that's your daily read. I'm Jeff Kikel, exit rich, retire free. As always, this is for education and not investment advice, but if you'd like to talk through your own plan, you know where to find me. So thanks and have a great day, and we'll see you in the morning.